Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, see what's going on. If you want to follow me, it's at Pioneer Square Finance. And if you want to join our community, finding-value.com, we've got a question and answer session occurring right now. If you're watching this at 7 to 10 a.m. in the morning, which most people do, we are going over kind of how I evaluate companies, how I find them, and what companies I think are the best for this commodity bull market that's coming up and the reasoning behind it. We do have a special coupon code that's still active. Special is the coupon code. If you'd like to join, the deals are in the description link below. So David Burrows, he says, in precious metals bull markets, prices can get stretched well above rising 200-day moving averages. On a sustained breakout, it would not be uncommon to get 80% above, which could bring initial targets on silver to the mid 40s. We may not know what will happen, but it is important to understand what can happen. So he's thinking potentially up to the mid 40s if we were to get that stretched above the 200-day moving average. And then he shows in history that we were stretched 82%, 134%, 114, and 150% above the 200-day moving average as we cycle above it. So that is what could potentially come in silver over the next trading weeks and months, and maybe even years. Willem Middelkoop says it's starting. First, banks halt sales of silver bars amid soaring demand. So that's banks, and that's in South Korea. So that's it's starting. Here we go. We're going to start squeezing the physical. We'll see what happens and where the price goes. Here's your silver squeeze that's coming. I know. I think they hit the silver price yesterday, um, but it doesn't matter. They're stopping a gigantic move here. I don't think they can do that. I think it's going to overwhelm them, and all we can do is take physical off the market, and good luck to them. Hedge fund manager sent me a simple text this morning. Crude $150. Um, yeah, I mean, I could send this guy a text. Crude $300. um, I think we'll go 300 plus by the end of the bull market. The end of the bull market is going to be late 2020s, early 2030s, mid 2030s. Whenever the bull market ends, I think we'll be in the multi-$100 oil camp. Um, and I'm sure it will cause a recession. It will be like a blow off move at the end of it. But I think that the floor will go higher. We're not going to have a floor here at 70. I think we're going to, when we leave 70 or 60s or wherever the heck we bottom at, I don't think we're coming back here for a long time. I think we're going to go to another level higher where our bottoms could be crude of 150, and we'll see multi-$100 crude. Maybe it's I'll show you on another chart below what I think will occur. Rock bottom entries, measured move suggests $50 silver is in the bag. A lot of people were looking at this green candlestick that we received yesterday. It did reverse throughout the day, but everyone was looking at this like, man, this thing's going to rip. Even myself, I was looking at it like, man, this thing's really going to rip. And you could see the RSI breaking out. I think they stepped in there and slowed the move. I really do. It was across the board. They hit everything. They hit platinum, gold, silver, copper, and they even hit oil. Um, for whatever reason, obviously they want to hold this thing down and keep it from ripping and getting the animal spirits all loose is what I'll call it, the animal spirits. But yeah, we'll see what happens over the next week or two and see how silver and gold and all these start trading again. Brandon says silver doing what it might do after breaking out of 11-year cup and handle, next stop 40 an ounce, enjoy the ride. And this was in the morning when everybody was ultra bullish. And this is what they were trying to stop. They were trying to stop the animal spirits. This here, these posts that are coming out, measure move 50, silver, next stop 40. This is the animal spirits. And that's what they came out to crush that, to stop the people from getting bullish. Here is a bunch of updates on the currency exchange rates. This is Brazilian real versus USD, and ZAR is South African rand versus the USD. And again, we've got this consolidation, falling wedge. It bottomed here in 2020s, and we had one big pullback, and I think we're going to rip. If we zoom in on it, you can see we bottomed and we're starting to go higher. Why is this a big deal? Why am I showing you this, and why should you care? This guy says, is the dollar going up? No, it was going up, but I think it could reverse here. The big deal is it's pushed all of the Brazilian real assets down. And when this reverses and goes up, in my opinion, emerging markets, Brazilian, stock market and such, are going to outperform, and money's going to rotate from dollar-denominated assets into the currencies that are outperforming, which could be the Brazilian real, if we can get this thing starting to move up. Here is the South African rand. You can see we had a big, huge decline, and we are potentially bottoming here inside of a falling wedge. When this starts to go up and break out, the South African rand will outperform the dollar. And that's a big deal, because if you go back and look at some of these areas where, like in 2020, the South African rand outperformed the dollar in this little move here, we saw like gigantic moves in some of the equities that we follow. Some of them went up 20x in that time frame, 10, 20x. So if we break out of this falling wedge on the bigger pattern and we go way up, like way up here, the currency exchange rate has an impact on money flows, on the equities and the companies themselves sometimes. Sometimes some of these companies borrow in dollars, but earn in the South African rand or Brazilian real or Australian dollar or even the Canadian dollar. And they are a monster leveraged play to currency exchange rates. So I'm watching this. If we zoom in here, I don't see a huge, it's not as bullish of a move on the shorter term as it is in the Brazilian real breaking this downtrend line. But these are things that I'm watching, and I think these are some things that you can look at this, you can see the currency's behavior in breaking out of maybe downtrend patterns and putting in bottoming patterns. And then you can play the equities of those countries that have those currencies. And you'll see money flow into them like no other. It's going to be probably a big bull market eventually. This is the Australian dollar versus the US dollar and Canadian dollar. So this is Australian dollar. You can see when we broke out last bull market, it was in 99, 2000. We rolled over for the last bearish bottom in 2001 or so, and then we reversed. That also coincides with the recession, declining of interest rates, the decline of the dollar. And then we moved on up for the commodity bull market up to 2011, which was the peak here in the Australian dollar versus the US dollar. So what people aren't, I don't think people understand that currency exchange rates and how this all plays out is the reason that money is flowing differently. It's one of the reasons. And you can see here, we've got 1, 2, and 3. This was the bottom of this consolidation in 2020. We came on up. They raised rates really fast to stop this move and hold this move down. If you zoom in on the right-hand side, we've got some bullish candlesticks starting to form right at support, which is the bottom of this area. When this starts to break out, we are going to see very big moves perhaps. It's the dollar that's weakening, and money's going to flow into Australian um, Australian dollar denominated assets. Then it could be a very big move. And here's the Canadian dollar. The last bull market was again 2001, 2002. We bottomed, turned, and broke higher. This move here from the corner to up 2008, 7, and this is 2011 here. You can go look at Canadian, the TSX Venture and Canadian stocks, and they just went ballistic. We've got a very similar setup. We've got 1, 2, and 3. The bottom was 2020 on the last move. Came up, hit our head. They raised rates dramatically, flooded the markets with oil. They did everything they could to stop this move from breaking out. They were successful in the short term. And then we can see a bullish formation starting to occur in the corner here. So if we do get a break higher and break out of this downward wedge pattern, you're going to start to see all of these things break. You're going to see even commodities start to break, like platinum. You can see platinum's the same exact chart as the Canadian USD. You'll see the oil markets rip, copper rip, everything. And you'll see money rotate differently in the market. And I think they're trying to stop that rotation, or at least delay it until their buddies get a big stake on one side or the other. Patrick Karam says, wake up, guys. Yep, this is happening right now. Gold and silver miners are breaking out on a daily chart versus the SPX or S&P 500. Are you sleeping? Well, I mean, I sleep at night. I'm not sleeping right now, but maybe when you created this, I probably was sleeping. But gold and silver miners break our custom heat map daily layout, and it's a shoulder, head, shoulder breakout here. Coiled and tight spectrum of moving average upwards here. So that's looking good. And hopefully that's what occurs. This is the end of the move there in 2024. You can see the fractal analysis and then the move on up. Looking pretty solid. Gary Savage says, these idiots really are determined to add even more fuel to the squeeze. Just more shorts that will have to be covered. They really learned nothing from the debacle in gold. So they're trying to short silver. They're trying to hold it in place. Gary's obviously freely sharing his opinion about how stupid that is and adding fuel to the squeeze, but let them do what they're going to do. It doesn't bother me, and we'll see what happens. This is Eric Yoon coming up. 1,200 paper contracts to slam silver. Just another regular Friday. So the dark force used extra 1,200 contracts to smash to 33.30 zone. They are very desperate. So that's what it took to hold the price of silver down. They just release a bunch of paper contracts, hold the price down, and then we wait for another day. Buy physical, guys. Take the physical off the market. Just squeeze them on the physical side. What are they going to do? Can't do anything about it. You squeeze the physical, they're done. They are done. Nominally Rich, it says, at this point, one needs to be a full-blown idiot to not see what's going on. What is he talking about? Crude oil, gold, silver, platinum, copper did the same thing as well, all getting slammed at the exact same 8 o'clock moment, roughly. So they're all getting slammed. They're trying to hold this stuff down, is what their opinions are. I think they can hold it down for a little bit. I don't think they can hold it on the long term. They definitely can't hold oil. What you're going to see in oil, and what we are seeing, is you're going to see inventories get depleted. What are you seeing in gold? Inventories getting depleted, leasing rates going up. The inventories are getting stressed. We're seeing that in silver now. We're starting to see inventories get stressed. And then I'm sure platinum, there's like no inventory of it anyway. So that's always stressed. But that's the 8 o'clock coming out and slamming it as hard as they can. WTI, it says, Bessent expressed the commitment to reduce Iran's oil exports to 100,000 barrels per day, a significant drop from the current 1.5 to 1.6 million barrels per day. The statement was made during an interview with Fox Business on Friday. So if they're successful at doing this, they're taking off, out of the market about 1.5 million barrels. I mean, they're just squeezing the oil market to all get out. James Anderson says silver Shanghai Futures Exchange, levered long momentum traders finally awoken from their downtrending slumbers on volume and open interest. And this is the largest daily increase in open interest for silver on the Shanghai Futures Exchange since November of 2023, up 11.4% from the previous session, or 1,207 tons to 787,461 contracts. Precious metals, commodities, bullion at China. So this is the big move up in open interest and the volume behind it. Looks like to me that we've squeezed into this corner here and it's starting to break out to the upside for volume and for open interest. This is a fractal pattern. If you notice, this is a fractal here. It's a top. We come on down and then we come back into the bottom of the fractal. And now we're breaking out to the upside. Pretty cool chart there. SRS Rocker Report says, interestingly, if you look at the gold, silver, and copper price chart and squint a bit, they look nearly the same. Looks like their banksters are killing 3 birds with 1 stone. They're hitting it hard and trying to hold this all down. All of these are starting to break out. Copper's starting to break out. Silver was right at the starting gate to break out, and gold's already broken out. So I don't know how they're going to put this genie back in the bottle here, guys. They're desperate. They're trying to hold things down if they are in there. They're just going to make it worse. But, let them make it worse for us. LBMA is literally running out of physical silver, even faster drop than gold. And somehow almost nobody talks about it yet. This is data as of mid-Jan of 2025, and there we are, eating through silver inventories. Well, let's just eat it to zero. Screw it. Let's go for it. Investment wisdom. Not only should the lonely and uncomfortable position be tolerated, it should be celebrated. Usually, being part of the herd should be a reason for worry, says Howard Marks. That's your contrarian investing. You don't want to be with the herd, guys. The herd gets slaughtered. Energy headline news says President Donald Trump on Friday is slated to sign an order creating a National Energy Dominance Council and will task it with steering U.S. policy on the issue, underscoring his commitment to driving already record-setting domestic oil and gas production, says Bloomberg. Now, here's my question. Is he trying to put this all in place real quick before we get a big move in oil and silver and gold and all this other stuff? Is this what it means by monetizing the balance sheet? I mean, is that what we're talking about? Is the balance sheet our natural resources and monetization of the natural resources coming from this here? I don't know. I mean, maybe they need to get something through before they want the price to go way up. I'm just curious there. Yellow Bull says price movement justifying the narrative is an investment story as old as time. And as same is true for uranium, where consensus now appears to be that there's no supply-demand gap whatsoever. In light of that, let's conduct a poll. Where will the term price go first from here? I don't really care where the pricing goes in the short term. This is what I would focus on, guys. When has uranium gone up? It went up during each commodity bull market, and only during those commodity bull markets. So why aren't you interested in the commodity bull market? And why aren't you interested in all the currencies that I just shown above? Your commodity currencies are trying to put in bottoms. Uranium will go up when those currencies go up and the money starts to move differently in the market. It doesn't have to necessarily have anything to do with supply demand. It's with money flows and people getting destroyed in the current stuff that they hold. It forces them to move money to something else. And then they just chase price performance after that point. So what I would do is I wouldn't worry so much about the short-term price movements because that's out of your control anyway. And what I would focus on are the currency exchange rates, and I'd focus on the dollar, and I'd say, okay, in the long term, in 4, 5, 6, 7, 8, 9, 10 years, is the dollar going to be, on a relative basis, going to be higher or lower? If we're overvalued in the dollar right now and it's going to go lower, I would bet that uranium would go up. And that's how I would make my bet. It has nothing to do with the supply and demand. And generally what drives these big long-term markets is oil, less so uranium. And I know that sounds weird, but oil is if you've got a problem in oil, it's going to raise interest rates because interest rates are going to chase inflation, and oil's the number one commodity, and that's what drives inflation. So what we saw in history is credit creation tied with supply constraint in oil, and that caused money to rotate into commodities. That occurred in 1970 when we hit peak oil in America, and we had a demographic coming through home buying years, which increased credit creation. That also occurred in the real estate market, credit creation occurring in the 2000s, and we also hit peak oil in conventional oil. Shale oil was brought on in 2011 to 2014 in that time frame. And then we bought ourselves some more time. Now we're hitting peak oil in the entire world, conventional and unconventional. And if we've got credit creation continuing to come into the market, we are in a housing market demographic favorable phase. That is going to create inflation and higher interest rates and the rotation of money again. So we're right there like we were in 1940s, 1970s, 1999, 2000. We're at the beginning of this move. And we can see it in the charts. It's not that big of a deal. So it doesn't matter how I answer this. It doesn't matter how anybody answers this. If it's going down or going up, it doesn't matter. What matters is that we need money to flow into our stuff. And I just gave you the reasons why it will do that. James Anderson says, take advantage of low premiums at the moment, USA bullion buyers. The sixth wave of bullion ARB spikes is destined to slam ashore as the premium pendulum swings worldwide. This is percentage premium, and right now we're real low, and we can see the big pullback. This here is the same pullback fractal that you see all over the place. So we're swinging from real low premiums. When I purchased my silver at those really low premiums, it was all through here. 2018, 2019, and 2020 is where I really loaded up in silver. In 2020, this is when I didn't buy it, is when we got the spike in the premium. That was the COVID crash. And the spike in the premium, I was like, I'm not going to pay that for silver. So the price went way down, but the premium went way up. We're at low point right now, and this is probably a good time to be looking from a premium perspective. Part-time Trader says, still my favorite chart artist. We disagree on crypto, but I'm absolutely on board with this silver technical analysis. We broke through some resistance right through here, the line going across. You've got support, support, resistance, resistance, and then we broke through resistance, used it as support, and we're starting to break higher. We are also starting to break through on the MACD here, this downward trend line that we were breaking higher here. So this looks real good for a potential big time move in silver. Grady says, been saying lately that Platinum is now seriously thinking about going for a mega breakout. And now it has the expected historical breakout. Just like silver was, Platinum was sitting right below a historical huge blue breakout line. It's been in a cyclical bear market for 17 years and was about to break out and resume its secular bull market. A generational breakout and opportunity is incoming also for Platinum. It's now here. Platinum has been basing out for about 10 years. Just like back before the start of the secular bull market back in the 90s, the blue breakout confirms the resumption of the secular bull market for also Platinum. And the blue breakout also confirms that wave 3 has started, which is the strongest and most profitable phase. Platinum has a very, very long way to go. The posted ratio charts look fantastic. What the exact final target price will be is not important right now, really. What is important is to get ready and to get real guidance along the way. So there's platinum. It's starting to break out. It's looking ripe to rip. I know we had a reversal day yesterday, but don't let that confuse you. This is going to This is going to be a big move when we break. Big move. It's going to be fantastic. The purple pattern uh, below has broken out and back tested. It is go time. Been posting this chart for quite a while now. The fact that this chart gets few likes still is a good thing, and it shows that people can still not believe it. One second, guys, I just lost where this was. Okay, still not believe it. And at the same time, the 100 post on EG Comex defaulting gets people excited and active. It is like most have forgotten that it is value one should be looking for and not wasting time on attention-seeking posts, especially for things that are given to happen but years from it. This is probably because most look for instant gratification and are drawn to posts that offer the promise of metals going to the moon as of yesterday. Most have no patience and not enough knowledge to sort out what is true value and what is not. Join us so you do not miss one of the greatest bull markets of all time. Get ready for the move in many sectors, and here it is. TSX Venture, we can see it in the Canadian US dollar that I showed above. All of it is a mirror image of each other. We're going to see a big breakout here, and it's going to be a big move for the TSX Venture. Here is the pink limbo circle range, the fight versus old and new price range took over 4 years' time. During the last global financial paradigm shift, when the USD became the global central petrodollar, and oops is global 2020 COVID-19 crisis, uranium trade moves even slower than crude oil. So here's the old range. We were trading up here. We broke out of that range and went to $150 a barrel. What I think is going to occur is that we are going to break out of this range, and the new low is going to be somewhere between 120 and 150. That's going to be the new low point. And then we're going to go way above that to multi-$100 barrel oil as we break through it. So we're going to get a big break, go through it, and then we'll stay above and consolidate, creating a new higher range. So it'll be here, here, and then we'll break out and create another range on top of it. That is what I think will occur. And we're in the process of doing that. So this finger is where the red arrow is, or red circle is. Smart Real Estate Bet says another great post from Jay Parsons. To underscore a point that he references at the end, in order for rental housing construction to reaccelerate without lower interest rates, we will need higher rents for new supply in order to make new projects pencil out. It says, here's a challenge for the Fed. Inflation is still elevated, which means rates are higher, which is killing apartment BTR construction starts. And yet, rates to stimulate more construction to in turn help further tame shelter inflation, which is a third of CPI. Remember, the inflation 21-22 spurred the 50-year high in apartment construction, which in turn led to flattening rents for new leases, which is a major driver in recent cooling in the CPI. But if construction starts to remain depressed and demand remains strong, we could see rent reacceleration in 26-27, at which point we may see construction jump back up, but it'd take 2 years to deliver it. Just more straight knowledge coming from these guys. He says, I don't expect to see a nationwide price acceleration in double digits this year unless mortgage rates submerge to under 6%. But the basis for their overall bullishness is sound. From a housing standpoint, the 2020s are a repeat of the 1970s. That's not an opinion, it's a fact. And we're talking about the demographics behind all of this. Let's look at number two here. Number two is owner vacancy rates are under considerably more pressure and they drive general price trends. Affordability is in the 1978 range. Appreciation will accelerate as rates fall and cool as they rise. Rental supply is under less pressure, and that matters, but it may not stay there. So this is the crisis level of U.S. homeowner vacancy rate, super low level and crisis levels back as it was in the late 50s, early 70s, and late 70s. And we've been down there for a while. That's the problem. The problem is we don't have enough homes. And if people say we've got so many homes per capita, they're retarded or stupid, however you want to name it. They have no idea what they're talking about. Because you wouldn't have these charts. Here is the house affordability based on median family income. It's negative when it's up, it's positive when it's down, and we're at neutral right now. And then we've got supply versus price appreciation since 1975. So this is your U.S. ownership vacancy rate, which we're way down there. Here's quarter two, 2024, and this is your price appreciation. So we were coming up, this is your zero line. So your vacancy rate drives your price appreciation. That's what matters. Nothing else matters. Your vacancy is a function of inventory too. So I hear all these people, they talk about all these things, they've got all these different charts and graphs, but they're charting stuff that just doesn't matter. This here, look at where this is. There's no price appreciation ever when you've got vacancy rates above 2%. This whole thing, well, there's a couple maybe over here that are slightly higher. But as the vacancy rate declines, boom, 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 when you're under 1%, I mean, you will be appreciating between 4 and 20% in home prices. Where are we located right now in vacancy rates? We are at 1%. So 1%, historically, this is the data, and everybody thinks we're going to crash. How? That's not in history. We need to get inventory and vacancy rates up somehow, but we don't have enough homes to do it. We don't have the home construction to get us there. And that's where I don't understand the bearish people. The reason I don't understand it is because they have no idea what they're doing. So the only way to take that stance to be that home prices are going to crash 30% in 2024 and 2025, which they've already projected, it just means they have no idea what they're doing. I mean, that's like saying I've got a 150-inch vertical. I don't. But if they don't know what 150 inches is, I got a 150-inch vertical, apparently. Just dumb. It says vacancy rate data came out last week. The news wasn't bad, but it wasn't great either. On the owner-occupied side, vacancies ticked up 0.1%, but they're greater than 1% for the first time in 5 years. On the rental side, they remain low, but out of crisis zone, and we're flat. So we need this to come back up. It's really what it means. I think I went through all these other ones. So that's where we're going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code is still active. If you're on a monthly membership and you want to go to the yearly membership, go ahead and sign up. Use that coupon code and get yourself further savings. That's what I'll say there. If you've been with me for a while and you want a different coupon code or something like that, I do have coupon codes for those that have been with me that want to switch from a monthly to a yearly. I can help you out, and you can use that code at any time if you've been with me for over 6 months. But that's what I've got for today. We'll catch you next time. This is Finding Value.